Hello, this is Surya Sahan. Welcome to the Insurance Story Podcast, a platform to spread knowledge on insurance innovation, digital disruptions, and entrepreneurship. Our website, insurtech.com, and we are available on Spotify, Apple, Audible, and Amazon Music. Today, we will discuss on the topic predictive analytics in insurance and actuary perspective on AI tools. And for now, I'm delighted to welcome our guest, Akshay Dhand, who is the appointed actuary at Canara HSBC Life. Akshay has been with the company for over 12 years, overseeing its product strategy. He previously led the pricing and corporate actuarial team as well. With 19 plus experience across the UK and India market, Akshay specialized in valuation, pricing, product development, risk, and capital management, not to forget reinsurance and ALM. He has successfully managed large teams and cross-functional projects in this domain. Akshay holds a master's in actuarial science with a distinctions from University of London and a bachelor's in mathematics from St. Stephen's College, New Delhi. He is a fellow of the Institute of Faculty of Actuaries UK, the Institute of Actuaries of India, and the Insurance Institute of India. So Akshay, a warm welcome to the show.
Thank you, Surya. Thank you for having me here.
Akshay, actuary, as we understand, it's of course not everyone's cup of tea, right? But it's very interesting to see how tools like AI and other emerging technologies is really taking the route to this particular subject as well, to kind of revolutionize the way it's being done, how pricing is done, how actuarials manages things, and of course when numbers comes in, the magic happens, right? So my first question to you is, how has AI driven predictive analytics enhanced traditional actuarial methods for risk management and pricing in insurance? And I believe these are some of the very important aspect which viewers, listeners should understand from the insurance space, that how they really buy premiums and how their pricings are done. That will give a more holistic approach to how they really relate to insurance.
Sure. So actuarial science is actually a science which actually was born out of insurance and pensions. So essentially, what actuaries do, or a major part of what actuaries do, is about looking at predicting the future uncertainties associated with the lives of individuals, with their health, with their travel, with their car, with their home, etc. And due to the risks associated or due to the risks emerging because of the future uncertainties, by predicting those future uncertainties, you're able to put a price tag on the amount of monies which would be needed to protect the individuals from a financial angle because of all these uncertainties. So that's what actually do. So it's all about predicting the impact of these future uncertainties which may happen to an individual because of the risks which are all around us. So that's essentially what actuarial science is kind of based upon. So to predict any sort of future impacts, there are two key items which are needed. One, obviously, you need data, what's happened in the past, what's happening presently. And also the ability to analyze that data, because you have data all around you, but whether that data is relevant, whether that data is applicable, is something we have to look at, and then use that data to be able to do our predictions or to do our future projections and so on and so forth, right? So this is where AI is coming into the actuarial profession. It is coming into the insurance industry and the actuarial professions, because it allows you to do two things. One, AI allows you to look at a very vast volume of data, because the data around us is only increasing. Earlier when we would do pricing, we would look at only certain parameters. But the amount of data which is available to be able to assess risks and to be able to price policies or price products is only increasing. And to handle that kind of volume of data, AI can be crucial in doing that. The second thing which AI can be used crucially is because data historically comes from traditional sources for actuarial science. However, with again the kind of data which is available in the world, we are increasingly going into non-traditional data sources. For example, internet. So, for example, social media. You know, for example, the spending habit of people, their visits to pharmacists, the way they drive their car, etc. So, a lot of non-traditional sources of data are coming into the picture as well. Again, which is where AI comes into the picture, and by increasing the ability for actuaries to be able to analyze a vast amount of data and data from both traditional and non-traditional sources. That's how AI can actually and is beginning to get used within our field to be able to better price products, better underwrite individuals, better underwrite risks, and hence be able to price, get a sharper price into the picture. So that's what we're trying to do as far as AI is concerned.
Right.
That, yeah, what that does effectively is that your accuracy improves, because when an AI model is using data, it's able to read data more accurately. The chance of readings being manually reading something and missing something is reduced. Efficiency, it's able to do things faster as opposed to being done by uh, you know on a manual basis. It improves the scalability. So what you can do is you can do many more things and a much more volumes of data, much more analysis can be done in a smaller time frame. So that also is helping. So scalability, accuracy, efficiency, all these three things are the advantages which AI is bringing in and will bring in to a greater ability as we go into the future, when we use more and more AI models to be able to carry out our pricing and risk assessment.
Right. No, absolutely. No, with benefit comes always the challenges and the roadblocks, right? So, from the actual point of view, what challenges do you face when integrating AI tools into this predictive models, or particularly in terms of data quality, interpretability, or any sort of regulatory compliance, being insurance, a highly regulated industry?
Sure. So rightfully you said insurance is a highly regulated industry. So whatever we have to do, it has to be within the ambit of insurance regulations. So that obviously limits what we can or what we can't do as far as AI models are concerned, and we definitely have to abide by those regulations. Before even going to regulations, the let's go to the basic step of data. When we're using a lot of data from traditional sources, a lot of volumes of data from non-traditional sources, ultimately your output is going to be as useful as the data you have. So if the data source is not accurate, if the data is not complete, the data has some fields missing, all those things will lead to if the data is inconsistent, all those things will lead to the output of your model being not the best. So that's one concern as far as data is concerned. So the quality of data is very important. AI is not able to interpret all kinds of data. Unfortunately, at this stage, it might happen in the future. It may not happen, which means that you still require a certain amount of human intervention. So I'll give you an example. So when we do our mortality analysis within our company or within the actual world for pricing life insurance policies, so if we look at, let's say, last 5 years of mortality analysis, we'll see increase in mortality experience during the COVID years, right? So which is acceptable, which is known, but we also know that that is something which may not necessarily get repeated in future. So what we try and do is we try and remove the COVID claims from that analysis to look at the mortality analysis without COVID claims. However, then also when you do that, you will see that there is a certain enhanced mortality experience or worsened mortality experience, to be honest, which we saw in those years, especially 21 and 22, where 2021 and 22, where we had various waves of Delta coming in. Now, one would think that okay, the AI tool will think okay, we've removed COVID claims from this, so hence this can be taken as the standard of mortality experience. But that's not necessarily the case, because there was lockdown, there was COVID. A lot of people with other kind of issues were not able to access healthcare facilities, because of which the general mortality rate went up, right? So you actually need to remove that bit, also that bit also out of the data, to be able to use the data accurately to price policies. So that is something, that bit of reading and that bit of understanding and analysis or thought process, AI is not able to do at this stage. So those things are still evolving. Those things still need to be managed or figured out how to manage that. The third thing, which is, I guess, probably more typical to actuaries, is that actuaries are traditionally, in fact, traditionally very traditional, right? So as a result, to be able to convince them to be able to use AI tools for their work requires certain amount of conviction building and conversations which are happening at the moment, and even if they are convinced, and as and when they're convinced, we also need to then train them to be able to use AI appropriately, the models appropriately. We need to have for example, the Institute of Actuaries India has now started conducting seminars and short courses on AI, as part of their training programs. And also, it is happening. The training is happening, but obviously, this will take time for it to be acceptable to actuaries, and then for them to be able to make that effort to learn how to use these tools to the best of their ability. And the last thing, in fact, couple points more. One, actually, again, the customer's angle is also very important. If a customer comes to know that his decision on, say, whether he's been given the price he's been quoted for a policy, or a decision which he's getting from the underwriter for a policy, is based on, say, a tool's output as opposed to a human's output, there may be some customers who may be uncomfortable about it. So again, the trust has to be developed with the customer also, that this tool will give you an output which is going to be acceptable, which is going to be reasonable. So that thing is there. And finally, last but not the least, at least the regulations with regards to, while they're not, I don't think there are any specific regulations within the insurance world for AI, but they are in regulations about handling data, about data privacy, data security, and all. So all those things have to be taken into account. All those things need to be allowed for appropriately, so that bit of regulatory compliance is at least achieved. So there are a few things these are some of the challenges I see as we use more and more AI tools into our pricing and other works as an actuary.
No, absolutely. When actual science comes in and the evolving new roles with the evolution of technologies like AI, as we see the futuristic roles of data scientists and others, which is really popping up in today's career or the job market. Where do you see, or rather, how do you see the collaboration between these actuaries and data scientists coming up as techs like AI continues to transform this predictive analytics in the insurance sector?
Hmm. So, so obviously, data scientists are scientists or people who are trained to be able to use data in an effective manner to be able to generate results with better accuracy, more efficiency, and scalability, and all these things which I said earlier.
Right.
However, they do not have the domain knowledge which actuaries and, say, underwriters will have, who are working in that field, who have been trained in that field day in and day out.
Right.
So there has to be a strong collaboration between data scientists and the domain experts to be able to create those tools which can then be used effectively for the particular domains in question. So I'll give you an example. So we, in fact, in our company, we've recently launched and we're doing a pilot on an underwriting tool called OmniGen AI. And what that tool does, it basically takes data from all sources, It could be medical reports, it could be the questionnaire which has been filled in, it could be bank statements, financial information, etc., etc., etc. It takes all that information, and then it feeds it feeds that information and compares that information with our underwriting manuals and what are the guidelines given in the underwriting manual. So without having that domain knowledge coming from the underwriter who's providing those detailed underwriting guidelines, this tool will not be able to work. So the tool has been made complete by the domain knowledge which has been provided by the underwriters within the tool. And then what this tool then does, it takes all that data, collates all that data about an individual, compares that data against the manuals of the underwriter, the guidelines, the manuals, the rules, etc., etc., and then throws out a result. Whether, for example, a risk should be accepted on standard terms, a risk should not be accepted at all, a risk should be accepted on special terms, or the risk should be deferred. So this is something which we are doing in our company at the moment. We're running this pilot, and we'll be running it for a period of time before parallelly between the where an underwriter will also be assessing the case, as well as the engine will also be assessing a case. And as the quality of the output from the engine improves, at some stage, some case may eventually there'll be a cohort of cases which eventually might go just to this engine. But to do that, to be able to have developed this AI tool, the collaboration between the domain knowledge experts and the data scientists is extremely critical, because without it, things will not move ahead. So yeah,
Yeah.
an
So
example.
as I understand is it's the guidance should primarily flow from the actuary side to the data scientist side, and they are
Yes,
more
yes,
into the execution part. Whether
yes.
it comes to numbering or the ethical issue, the guidance ideally should flow from the actuary to the data scientist. But
Yes.
just out of curiosity, do you think in
Mhm.
the future, as technology evolves, these two fields will remain separate, or there's a way it can be combined?
So So actuaries tend to work in a certain set of fields historically. So like I said, actuarial science was born out of insurance and pensions, and
Yeah.
now actuarial science has branched out to other fields like banking, like investments, sustainability, etc., etc. So, but still, uh, they are, say, instead of 20 fields, there are now 30 fields that actually work in. So in all those fields, that the collaboration is going to be a must between the two. In fact, with actually getting trained as a data scientists, or there's quite a possibility that actuarial courses will include subjects on data sciences going forward, where the actuaries will get trained in data science as well. So the domain and the usage bit will get combined. But for the vast variety of other fields which are non-actuarial in nature, you will need specialist data scientists always, right? So I think while actuaries might get better at doing what data scientists are also doing, uh, but they will not be able to cover the entire plethora of things which data scientists do, because they also look at other fields. They don't just look at insurance and pensions and health and investments and stuff. They do other things as well, right? So I think the two will remain separate. The two there'll be some overlap happening, but I think both of them will retain their individual requirement and space in the industry.
Right, right.
Yeah.
The last question, and which is some sort of a kind of a question that evolves in everyone's mind in the insurance field.
Mm-hmm.
That is, how do you differentiate, or what's the real difference when it comes to actuary and underwriting?
So an actuary is looking at, first of all, the whole plethora of the financial management of an insurance company. So an actuary is looking at the pricing of insurance products, and actually looking at the valuation of the liabilities of insurance products, how insurance companies' assets should be managed to meet the liabilities, what are the other risks associated with insurance products, such as besides the mortality risk, things like persistency risk, expenses risk, investment risk, etc. So and actually looking at an insurance policy or an insurance company from all aspects.
Right.
Whereas an underwriter is a very specific, very highly specialized field where the underwriter is looking at the entrance. He's like a gatekeeper for the insurance company. So when a policy or a prospective customer comes in, an underwriter has to assess that whether that customer's profile or the mortality risk or the morbidity risk or the health risk which that customer poses is in line with what an actuary has priced it for. Right. So they are collaborating with the actuaries on a very specific thing for pricing. They're not going to, and they're going to see whether this particular profile is in line with, in line with the pricing which has been done or the mortality assumption which has been done, created for the product. Whereas an actuary's job is a much wider job. I personally feel it's a very strategic role as well, because we get involved in giving directions to sales and finance functions of the company on how to grow the company in a sustainable and profitable manner.
Yeah.
So it's a much wider remit, in my opinion. Underwriting is a very specialized role, looking at risks as they get onboarded, whether the risk being onboarded is acceptable vis-a-vis the pricing which has been done for the product in question.
Yeah. So primarily, you are really responsible, or you're the man behind the P&L statement of any insurance.
Well, yeah, I have a decent role to play in it. Let's put it this way.
Yeah. Well, actually, a fantastic discussion, and thank you for sharing your thoughts today. A true delight to have you as our guest.
Thank you so much. Thank you so much for having me.
And lastly, to wrap this up, you are listening to the Insurtech Story podcast, and see you at our next episode. Till then, take care and stay safe. Goodbye for now.